Hi, and welcome back again to Tim Bigham's Options and Volatility newsletter, powered by BuyAlert Pilot AI, which we use day in and day out to add to our research, increase our option trading toolbox. So let's jump in and take a look. First, the vol capture trade today, and we're just going through one trade, but certainly you can do buy rights, other things. But on Lithium America, LAC, where news today that the U.S. government is looking hard at taking a stake in Lithium America to kind of protect with the mineral war going on. That's kind of the unseen war, right, between U.S., China, and other countries. So U.S. absolutely wants those minerals to be available for not only the electric cars, right, but now for the AI game. So let's jump in and take a look and see what happened today with the stock moving up 50%, right, but IV exploding off the chart. So here is the scanners. Here's one I use. You can see Lithium Americas, right, number 2 on the list, right. IV rank 100%. In other words, options have not been this expensive in the past year, right? You can see over 370,000 option contracts traded. So certainly huge option volume that drove up the implied volatility, as we'll see in a second. This is my thinkorswim scanner that I built, right, basically to identify unusual option activity that lifts the implied volatility surface. So basically at least 2,000 contracts that pretty much exceeds open interest. All these did, right, that moves the implied volatility at least 3 vol points. We can take a look just how much that IV lifted today. You can see Lithium America basically hovering under 100 IV, never had really gotten above it, was trading more at a kind of 75 IV, right? Before today, we saw that huge uptick in implied volatility on the news, which set up ideally for certainly a straddle trade that we'll take a look at in a second. Here you can see that implied volatility lift from yesterday to today, just massive across the whole vol surface, right? Another look at it. Here is kind of going back in time. We can see implied volatility, as we talked about, hanging right around that lower 70, upper 60 level. Then today, lo and behold, boom, exploding to over 180, right, on the at the money IV, right? You can see also the out of the money call IV far exceeding the out of the money put IV by 30 vol points. So call skew going rampant, everyone rushing in to buy calls, which the stock was fairly cheap. It still is. It's trading right around $6, right? So, but you can buy the options even cheaper and buy lots of them, right? Here you can see the actual volume centered as normal in the short-term OCC calls, because those are dirt cheap, the highly speculative ones. We chose to go out to Jan with our trade that we're going to look at in a second. Certainly big volume out there as well. Second most, 82,000. You can see vol basically doubled from, as we talked about, 75 to 150. You can see the IV percentiles we talked about, over 100%. So certainly IV off the charts, which sets up ideally for a sell straddle trade. I simply pulled off the option montage from yesterday's close to today, right? So with the stock at $3.30, the January 16th of next year straddle, right? 7.5 straddle, which is deep in the money on the puts, way out of the money on the calls, at least it was yesterday, right, was trading right under $4.40. The IV on that trade, which is kind of the average between the call and put, right around 100. A delta, if you sell that put, right, which is deep in the money, selling a negative 90 delta puts you 90 deltas net long. Selling a negative 15 delta on the call, which has a 15 delta we're selling. So your net delta, right, you'd be pretty long. You'd be 75 deltas net long. 100 is being long the stock. So that's certainly a bullish trade if you would have done yesterday. Today, the stock did rally and close at 601, right? But that 7.5 straddle actually increased in price, right, from 437 to 475. So it had a big increase in price, right, of almost, 38 cents, right? Even with the stock moving towards, but not really that close to that 7.5 ideal strike price, right? Which is where if you sell a straddle, you want it to close at the strike price. So the straddle increase, even with the stock moving dramatically towards the strike price, but still well away from it, right? And you can see the IV just jumped dramatically to over 160 from basically 100. So a massive lift in that IV, right? So today we had a 160, 170 smooth IV, the average of the two. Yesterday, 102.50. So a almost 60-point IV lift, which is dramatic. And then the delta now, right, is negative 17. Why? Low price stock, huge lifts in implied volatility, that upward drift, right? The puts are bounded at 0, right? So they actually don't feel the effect as much as the calls, that dispersion effect. So anytime you get this huge run up or high IV on low price stocks, out of the money calls will be trading actually at a higher delta than in the money puts, believe it or not. We'll take a look at that in a second. So this sets up ideally to sell that 7.5 straddle at 475. You have plenty of upside still before it even gets in the money on the call side, right? And taking a look at your break evens, right, which is simply the strike price that we're selling plus, right, the premium that we're receiving, 475. So 1225 is the upside kind of break even. The downside, right, which is again the strike price less the premium we're receiving, right? So you have a wide swath, right? You have 275 at risk max, right? You're bounded at 0. 1225, you need the stock to double in basically a little over 3 months, right, to get in trouble on this trade. The news is basically out. The government hasn't officially come out and said it. So I think if you do get IV to revert, which is the key to this trade, we'll take a look in a second how much you can make. So let's jump over. Here is the straddle from today, basically using a 160 IV. As we said, that straddle priced out at about 475. 167, right, on the calls, 310, let's call it, on the put side. That delta, as we said, right, here's the delta on the calls, 58, the puts 41, right? So you'd be 17 deltas officially net short. But let's say the IV reverse, which is what we're absolutely anticipating, right? I mean, this kind of IV spike normally doesn't last too long. So anywhere back towards that $100 level, right, which had never been exceeded over the past year, but even 125 will be a nice gain and 100 will be a bigger gain, right? So a 125 IV, right, that straddle now, everything else being equal, the only input change was changing the implied volatility to 125, right, from the previous 160 level, right? So that's the only change, 160 here. Then we simply change the IV on these two inputs to 125, gives our straddle price of 382. So almost a full dollar gain just on IV reverting towards where it was before, not all the way. And we usually don't wait for it to revert all the way back. We know IV can be very sticky on the reversion, but certainly capturing almost a full point gain, just having IV revert is very nice indeed. Also note the delta now has softened to just 4 deltas short, right? Basically a 52 delta on the call now, a 48 on the put, simply because IV dropped. Every other input, right, was the same. Then let's move it back down to 100, which again was the upper absolute most that the really had approached over the past year, really never exceeded that. But if we get IV to drop back towards 100, that straddle now drops all the way to 315 from 475. So you can see that very nice gain, right? We're able to sell it up here at 475 and then buy it back here at 315, gives us a nice gain of $1.60, right? Or a very nice $160 per contract on each one of those. The IV, if it goes to 100, right, you can see that the delta now becomes net bullish, right? Because all of a sudden, lo and behold, the delta on the call is lower than the delta on the put. So selling both, right, puts you in a positive delta. So it shows you the effect of a huge spike in delta, especially on low price stocks, right? And how they can kind of artificially inflate deltas, right? But here you can see how having the IV revert back will actually officially change that delta, which up here was a negative 17 delta, right? And down here was a positive 7 delta. The only difference is IV at 100 versus 160, and that 100 again is the highest level we have seen over the past year outside of today. So this sets up ideally, I think, for a sell straddle certainly trade, just looking for that IV, which has absolutely gone to the roof, to come back down to earth at some time. Doesn't have to go back down to that kind of 75 level where it was trading at seemingly forever, but anywhere approaching 100, we can take the trade off and move on. So hopefully it provides insight into how we go about identifying trading opportunities, how we structure them, how we take advantage of perceived edges, right? Certainly this one with that massive lift in IV is one of the biggest edges I've seen in a while. Will it work out 100%? Who knows, right? Trading's about probability, not certainty. But if you put the edges in your favor, position size accordingly, and make sure you take care of your risk up front, I think over the long haul, you'll do just fine. So until next time, as always, here's the good trading. And we'll jump over and take a look at our pilot AI and just see what that has to say on maybe just price target, right, of LAC. And this is a nice thing I always like to do to kind of confirm everything, right, is to bring in some more data, see what the pilot AI has to say, see how quick it is. Target, price target high 616, target low 523, medium 563. So basically right around where the stock's trading now, right, which means that everyone's kind of thinking, yeah, it's going to hang around here. Yeah, the government took a stake, but I don't think the government's going to be overpaying for it. I think if anything, it should take away the big downside on the stock, right? And I think that will dampen IV, right? So we'll see what happens with that going forward, but certainly being able to use Pilot AI to kind of get some more insights. Here's the latest news on Lithium Americas. I'm sure it will bring up what the government and the Trump administration seeks to stake in Lithium Americas. Only a 10% ownership, right? To kind of, make sure we have those materials. So I think the kind of move in implied volatility certainly today is way overstated. We shall see. Welcome to trading. We'll find out down the road. But also you can see that using Pilot AI is another benefit, another tool to add to your toolbox. So again, until next time, as always, here's the good trading.